Welcome to Commodity Analysis on the 18th of September 2013 and a reaction line analysis. We're going to have a look at some reaction lines. We're going to have a look at some markets, and also the anomalies of some of these reaction lines and some of the shortcomings of the data presentation systems we're using, bar and candle in this case. This is applicable to all trading platforms that have line tools. If you've got a trading platform that draws a pitchfork, then you'll suffer from the same sort of problems as this. Let's just have a look at this fork here. You can see this pivot here, it's called PF. And I am aware that there is some lag between what I'm saying and what you're seeing on the screen. So I'm going to just make sure you can see this black fork here, PF, using this low, this pivot, this high pivot here, and this low pivot here below $1,200 on gold, and here you can see this has been drawn. This was the first touch on the center line, price fell away. These are the reaction lines. The reaction lines, as we all know, is the distance from A to the midpoint of the BC line, which isn't drawn in this case, and for those of you who want to see it, let's just whack one in. Let's get rid of that. Let's make that black, just so we're all singing off the same hymn sheet. And also let's make that array, not array. Here we go. There's the BC line. So it's the distance from here to here, projected forward into the fork at 100% intervals, sometimes at 50% intervals, so you'd have twice as many. But let's just have a look at this, because if we're to trust these lines, there's nothing going on there. There's no reaction. But yet we see after each of these reaction lines, there is a fall away in both cases. Well, I'm just going to do this. I'm going to draw a manual trend line over that, because I'm going to demonstrate to you that there are other lines at work here. That's the first one, and this is the second in this fork, and there it is. That's pretty accurate. There we go. We drop down to the 240 minute, and we can see there's already a change of location for these lines in both instances. Drop down to the 60 minute, and we've got another reaction line that's not even showing up, and yet another from PPF fork number which has been nominated with the code PPF. That's to do with our pivot formula. We only draw forks that have not only a certain relationship between pivots, we have our own pivot formula, which is just simply a numerical. We grade pivots, and not only that, the angle of certain forks. And you'll know about the F&L fork that we use. So I just want to, I'll come on to that in a second. Where's gold going? Well, it doesn't look very healthy, but I haven't given up on it. I guess we were looking to see gold retrace from its all-time highs. If you've read my work on gold, I was a lone wolf crying in the hysteria that was last year. People calling for $2,500 an ounce, and it just looked like the biggest topping up pattern I'd ever seen. And we, when everyone's long, you just want to be short, don't you? Really, that's not healthy. Okay, that fork showed nice touch on the center line there. It's not by any means finished, and we can draw plenty more of these. Let's try this one. I guess that's also an Andrews fork. No one can deny both of those are valid. Both of them are showing that price is moving away from the center line and not towards it. So it's the downtrend is still very much intact, but I'm beginning to think prices, we're having a little jig around 1300, having had this rally, quite sharp rally, and then this retracement. There's our recent low this summer, back here, 1175. Here's the recent mid to high 1430s, and here we have retraced. Still very much looking as if we may go slightly lower, but I've been watching it for the last few days. I don't have any position, but I just think it's beginning to interest me. I haven't touched it with a barge pole for months, but I'm paying attention, and I'm going to watch it quite closely. I think we could be, well, I want to see if we start to make another pivot, another low, and if we move up above 1400 again, above 1300 again, I'd be interested to take another look. But just let's have a look. There you are. There's the and look at that beautiful correlation with price. I can't move that. It should auto. There you go. It's doing its job. It's fixed to whatever the pivots are nominated for the fork, and you can see there's another topic that we cover. The horizontals. These are median and reaction lines. Look at this beautiful behavior here. This is why, and these are the trade setups that you'll learn that are sent as a PDF file, recognizable median reaction line combo trade setups. And oops, what have I done there? That's not very clever. Let's just put that over again, over this line, and you'll see that there's resistance all along this line, and only a fool would try and buy at that line. We'd need a confirmed breakthrough to confirm a change of trend. But I just want to show you that again. There are the reaction lines. I'm going to show you something else as well. Let's just leave gold for the moment because I don't have a huge amount to say about gold. Let's go to the beans, NOV beans. I don't know any of you out there who don't trade the grains. They're dear to my heart, the old grains. And I just want to show you the angle of a reaction line. Okay, this is in the 60-minute. These are all from various forks. Let's just have a look at the, here we go. Just have a look at this one here. Again, can't move it. It should refresh, go back, there we go. Because, can you believe your eyes? Can you trust your charts? And the answer is no, not really. Because, I think let's just make sure that's absolutely spot on. We've got both moving. Let's just refresh again. I think we'll leave it there. I've drawn a manual trend line, in fact let's slim it down a bit, over the automated drawn, again from another fork. And there it is, there's my trend line. Here is, behind it, reaction line from fork number 4. And look at the reaction. The sharper, the more acute the angle, okay, the sharper the fall. And you'll see this time and time again. Look at that. No, that's, I mean, you can't get a sharper fall than that. That's a gap, okay? But these almost vertical, and you've got to watch them in the E-mini S&P. They're quite remarkable. But if you can combine these with these horizontal historical pitchforks or historical median lines or whatever you want to call them, there's some great, not only do they reveal market structure, but they offer ways into trends, ways into trades, and reveal visually stunning correlation with price. And we go down to the 30-minute and we'll have a look at some of these. Just have a look at some of this behavior. Again, individual. And remember, look at this. Beautiful, beautiful. There's my manually drawn trend line. Okay, because what we're trying to do is reveal price's intentions. And these turning points here. The first retracement of a new trend. We're going lower. It certainly looks that way. Or we're going to be in a range. In between, caught between these historical pitchforks. And this one here is a reaction line because of its colour. Let's go on to the E-mini S&P. Just have a look at the big picture. Today we've seen almost what amounts to a double tops in the 60-minute. Failure to make a higher high. And I want to show you this. Just have a look at this. We're going to go 1, 2, 3. And that's probably not a very orthodox pitchfork for some of the exponents, some of the masters of median lines. I'm not sure they'd appreciate that. But it's certainly, I think, a valid fork. And let's pop that on the low. And there it is. And I was looking at this last week. In fact, I think it was on after we gapped up. That's our close on Friday. There we go. And you can see that's on a important reaction line. That should refresh and go back. Yeah. So we gapped up, and then we had this. Let's just tighten this up. Yeah. Now, can you see the center line? I've tightened these pivots up and I've checked this on eSignal with a proper feed, and this is untouched. This center line appears to be, and you really got to be careful to make these sort of assumptions. But some of the rules that you'll learn in our PDF handout about visibility, it may appear to be touched in the 1 and the 5 minute, which we're seeing here. There's the center line. That's from another fork, so the blue one will ignore. Let's go to the 1 minute, and there's in the 1 minute a piercing, the 2 minute a piercing. Go to the 5, you can just see it. Now go to the 15. Oof. Okay. That's not convincing. Okay, so I just wanted to show you that. And again, we may see some support on this lower median line parallel, but we have a huge gap to close. So I wouldn't be looking to, especially with the Fed decision tonight, it's certainly not a trade I'm looking to take. Certainly not above these sort of levels. This could come back quite sharply. We haven't seen a retracement since really early September. So this is a time to beware. I want to show you this fork here. And its reaction lines. This fork here has given us the first touch. Our objective was there, 1688. Let's just tighten that up. There we go. It's very important. This line here has supported price and will do so again, I suggest. There are others. Let's move on to another chart. You can see here. Here we go. I want to show you this. This is a downsloping band of reaction lines from a monthly fork. Really quite a big fork. And again, there's the same fork I just drew showing the failure. Here we have an upsloping reaction line from fork number W. You can see how price popped onto that line and then rallied early part of this week. Let's go, there's one more, and there's the downsloping reaction lines that are, let's get rid of this because there's the downsloping reaction line. First touch, second touch, lower high. You can see this reaction line has carried price higher for that second touch, fell through. Second reaction line, price has risen. What to all intents and purposes looks like made it through and then failed at this fork here. It's fallen back. The back sides of these lines, the reverse sides of these lines offer, in other words, what I call the reverse of the face being this, the underside. This side will offer support in the same way that this side offers resistance. And I want to show you even an even lower time frame. Another reaction line with the same, a different set of reaction lines. Let's go up to a higher time frame to show you that. You can see, again, all drawn by automatic indicator. This big red line here is a very important fork, and again lies just below the 1700, 1698 area. So it's something we're going to watch very closely. Again, we have this fork in play, and price looks to me, I have no doubt, I think price will go higher. But will it go higher at the moment? And I just want to finally, on this E-mini S&P, show you something remarkable. We're going down 15, down to the 5. Look at this fall away today. Now look in the 1 minute. We have this reaction line that I, again, automatically drawn, not visible, because I guess the anomaly of the pitchfork indicator that's available for MetaTrader 4, sometimes if the pivots are not visible, you won't get the line drawn. There's a whole load of, let's just try and superimpose There we go. Over. Having a bit of trouble drawing this. There we go. Now we've got to the 5 minute. Look at that. Only visible in the 1 minute. This beautiful line here that actually you can just see it moving as the auto scrolling shows you where it is. Again, look at the angle. Look how the angle changes as we get progressively higher time frame. But it certainly has a good correlation with price, and that's why we use them. Reaction lines in conjunction with historical median lines. Check out the site, have a look at our material. I'm available 24/7, and looking forward to the next time we talk. Bye now.